Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a pretty strong buy response near Friday's low, which took ES all the way up to 2052. At this point, heading into the open, we know that the overnight session has been more bullish, and on the smaller time frames, the buyers are more dominant. But if you zoom out a bit, bigger picture, the market is still in a very balanced state, and it's simply balancing in a range. And for that reason, our short-term directional bias continues to be neutral until we get a break from this recent range. Even if you look at just the last 4 to 5 days here, you can see that it's very range bound with sellers active near the upper edge and buyers active near the lower edge. So we have to keep that bigger picture idea in mind, but heading into the open, we are going to give a little bit more edge to the buyers, especially if the market's holding above 44.75 to 46.25. On the upside, we have the first area of resistance at 50.5 to 52.5. That's a zone that's already been tested here in the overnight session, and a breakout above the zone would confirm the buy side in control, and from there we can test Friday's high, 57.58 and 60 to 62. Now, as long as we're going up on broad market strength and sustained upside momentum, then we may not get much of a response at 57.58, and 60.62 even becomes a very high odds target. And although sellers can be active on first test of 60 to 62, especially if the market is quite exhausted into it, we still have to assess the market in real time, determine what the reward to risk is, and then figure out whether it's worthwhile to short that area. Above 60.62, we have zone at 65 to 67, and that is a higher odds spot for sellers to be active and for a short setup to trigger, especially if we are exhausted into it. So 60 to 62 could be a short setup depending on how we approach it, depending on the underlying environment, just how strong it is, how much momentum we're seeing, and where the move really originates. And 65, 67, just from a location perspective, is a better spot for the sell side to be active. And then we have the recent high at the 70.5 to 72.5 zone. On the downside, ideally you want to see the market holding above the 40.5 to 42.5 initial support. And if it's really strong, it could even hold above 44.75 to 46.25. But in the event that it does not hold the initial support zone at 40.5 to 42.5, it tells you that we are still stuck in a range. We are still very balanced, and from there the market can go down and test the overnight low, 32.5 to 34.5, and that's still a spot where buyers can be active because in a very neutral or balanced environment, you can get sellers active at the upper edge and buyers active at the lower edge. So in the event that we start heading lower, the 32.5 to 34.5 zone can still attract buyers on first test, especially if you're exhausted into it. 24.5 to 26.5, 19.25, 21.25. All of those are zones where on first test we can get a reaction. It doesn't mean that we have to completely reverse off those zones. That's something we'll have to determine after the open to kind of see how the market structure is developing on the day. But those are zones where responsive buyers can be active on first test. But like I said, ideally, if this strength that we've seen in the overnight session is going to sustain and continue, then we should hold above initial support and possibly even pre-market support, and then put in a breakout to the upside and tag 57.58 and 60 to 62. Those are the higher odds targets. At that point, the risk reward becomes questionable beyond that, and it could take a lot more momentum and force to actually continue going on to higher prices. So those are the main ideas heading into the open. Let's see if the buy side can maintain the short-term control, and we'll take it from there.